Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar under some pressure this morning here. We're seeing really just continuing liquidation from the dollar positions. Obviously, we didn't get on the Fed. I thought we were going to go in and see something like this until obviously the Draghi through a monkey wrench, as I said, and also Trump caused his own pressure. But we're starting to see now the liquidation. Now, we did go in and come to the target. We had our stretch target at 96.91. We saw a little bit of a bounce off the 96.90, and now we're starting to see a little bit more here. Now, to me, I just think it's just dollar position lightning here, but be careful because, like I said, I think we can start to, as I was mentioning to a gentleman in the Asian session, I think that we can start to actually garner some momentum because the thought is the cut is coming. So as I mentioned to the gentleman, they're not going to wait for the bell to ring and they go, okay, we won't sell dollars until we get to the end of July. No, we're starting to see some liquidation from these areas at actually pretty high level already here with the dollar. So we're just seeing a little bit further selling here. We'll come in here to the cash dollar index. Right in here. We can still dip a little bit further, but if you think about this overall, got a ways to go. And actually now we've broken below the trend line, so we can start to move lower, but be careful. I mean, I take a scalp short, and I'm going to add up in here to that on the euro. And we've got them pushed here just above the 113, I will. We do have some levels here in the euro that we can go and move to, which is going to be that 13.14. Take a look at there. These 13.12 is the 78%, which is actually a pretty good solid area here. So we had a pretty good launch here. One of the things I'd mentioned to one of the guys in Asia at the time, and I had taken a scalp, and fortunately, I just got out just right before the thing started to turn. And I was telling the guy, I'm looking at it on the cash dollar index. I go, and this euro is holding up like a rock because the cash dollar index was popping up a little bit here, but the euro wasn't being affected by hardly anything. I said, hey, look, the euro should already be at about 12 in the lower 1250s. It's not holding, and the euro, I think it dipped about only to 1257, and then turned around, and obviously we started scooting up, and here we are now. Still trying to go and push further. So as I said, we're a little bit stretching here. We'll see if we can, what the euro does up in here, but probably a little bit of a pause here. So we're going to get into the news. Let's go into that. And let's take a look here with the dollar yen. The dollar yen's already had a pretty good fall right in here. You look here. Let's go and look over here real quick. Yeah, look, we've already made that 760, which is at 61%. We've actually been falling lower and coming a little bit off of that at this point. So let's go and move into the news. Leaders pour over EU jobs and jigsaw. The things could not run late tonight. In Brussels as European Union leaders tussle over everything from who runs the big EU institutions to the bloc's action on climate change. Emmanuel Macron continues to block Berlin's choice to run the European Commission. The German conservative Manfred Weber in a stand with knock-on implications to other posts up for grabs. One name being cited repeatedly for the Commission's job is French conservative Michel Barnier, but the quid pro is for that could be Berlin insisting that a German run the European Central Bank. This, of course, is even before any of the 25 capitals have their say. Separately, Poland is leading resistance as a move to the summit to commit to the region to being net carbon neutral by 2050. And moving on to the UK, on that front, Boris Johnson's consolidated his lead for the last night in a third round ballot, which saw the elimination of the only candidate resolutely against a no-deal Brexit. A further 2 votes today should narrow the field down to 2 names that will then be put to the Conservative Party grassroots membership. A YouGov poll released a few days ago suggests those members, more white male, old, and the population as a whole are going in gun-ho in a solid majority for pursuing Brexit, even if the lead to the breakup lead to the United Kingdom and significant damage to the economy. All of which provides the political context for the Bank of England's meeting on interest rates today. It's expected to soldier on as the only major central bank eyeing future rate increases, even as the others prepare to ease policy. The BOE's decision to announce its decision at 1100 GMT, with economists assuming now that there'll be a unanimous vote to hold rates at 3/4 of a point. On fundamentals alone, there are reasons why borrowing costs might need to rise. Wages are growing at their fastest pace in a decade, and public expectations for future prices are up. Yet the irony is the BOE may be able to let others work for it if the ECB, Federal Reserve, and others begin to cut rates again. While it holds firm, sterling would rise and Britain's monetary policy stance would automatically become tighter in relative terms. Moving on. The Fed delivers its thinly veiled message of monetary easing ahead, even not quite as aggressively as the European Central Bank did on Tuesday, and the Bank of Japan has joined the club with a nod possible for further stimulus later this year. It'd be almost perverse in the environment if the Bank of England went against the global grain at its policy meeting later today and continued to insist that the next move in UK rates was up. And so markets will watch closely for a shift in tone. Expectations with Norway's central bank will raise rates today clearly leaves it out of step. Either way, world stock markets have tapped up the G3 global central bank in signals, with long-term government bond yields swooning to levels not seen for at least 3 years and record lows in Europe. Even though the Fed was hardly unequivocal about the extent of future rate cuts, future markets have now fully priced in at least a 1/4 point by next month's policy meeting and a total of 3/4 points of easing this year. Some banks, such as Morgan Stanley, expect to deliver a 50-point cut to start with July. Global stocks are embracing the central bank dovishness, helped by fresh talks between the U.S. and China before the planned meeting between President Trump and Xi Jinping at the G20 summit next week. Wall Street futures were up 0.5% overnight after indexes there closed higher on Wednesday, with European futures on a similar note to their highs since late August. Shanghai stocks surged more than 2%. And moving on, the Fed signals and the reactions of the rate markets have seen the dollar retreat across the board, with the dollar index up down 0.3, and the dollar yen sliding to its lowest before the flash crash of January the 3rd. Possibly frustrating for the ECB after its aggressive policy message on Tuesday. The euro dollar is higher and back to where it was before the ECB Draghi's Sintra speech on Tuesday. In the UK, sterling gained against the dollar, but fell against the euro before the Bank of England meets. Despite global trade and recession fears and uncertainty surrounding Brexit, BOE officials have tried in recent weeks to insist that the market pricing of future UK rate moves is wrong and that it's more likely to raise rates than cut over the year. Whether it will concede some ground on that in light of the positions of central banks remains to be seen later today, with the contest to choose a new UK Prime Minister unfinished but still favoring the Brexit supporter Boris Johnson. Is a packed day for UK economic news. Aside from the BOE meeting, BOE Chief Mark Carney and Finance Minister Philip Hammond delivered their annual address to London financial community, and the Mansion House tonight at the UK May retail sales is also due for release. Moving on, the British High Street darkened again after Dixon's car phone, and we'll move on from there. Dollar on track for the biggest 2-day drop this year on the dovish Fed. Pretty much already went over all this. So let me see. Weaken the currency overnight. Blah, blah, blah. Nothing else. Basically what we've already covered. So let's get rid of that. So we'll start with the euro. Okay, great. And let's go in here. Let's reset all the findings now. So looking up ahead here, we've got some resistance coming in. You see right there at right here, 1303. Right there. And let's go into the 2 hour. Right there. For right now, I mean, we could stretch further. We've already had a pretty good run. We're going to go with 1302. 1302 for right here. Let's go here. Not that we can't push higher with 1302. Support. And we're going, let's go mark this off here. There we go. I've got 1302 here on the resistance and support. Let's go with 1254. Not sure we'll make it down there. There we go. Let's go move into the cable. I had a very fine run so far here in the cable. And we're going to go right here, right where we had this marked off here. 2734. And for support, obviously with the BOE, if they're going to suggest that they're still in the tightening, we could still make this run up here all the way to 27.62, but we'll stay right here for this 27.34. And on support, go with 26.78. And let's go move into the Aussie. Things are obviously turning around here for the dollar. Everything's going the other way now. Here comes the Aussie going the other way. We talked about this positively diverging over the last couple of days. And I mentioned that even in the pre-FOMC, that even though it was going lower, it was still positively diverging, because there was times when it had the opportunity to push much harder, and it was still, even though it was working lower, it was really somewhat to a certain extent fighting it. And we're starting to see this market come back. Support's going to be 68.75. Take a look at the 2-hour. Yeah, 68.75. And on the upside, we even talked about this yesterday. We said that this could have the opportunity to continue to move higher, more so than the others. Right there, 69.41. Now let's go on and move on to the Kiwi. Oh, wow. Even Kiwi's getting into the act. Nice rebound here in the Kiwi. Probably looking at this 66.12, but let's go into the 2-hour. Go right there for 66.11. Support will be right there. Let's see, this might be a little bit. Let's go right there with 65.44. And let's go into the dollar CAD. I mentioned to this someone yesterday. I was in the Asian session. This one left me a really bad taste in my mouth. I pretty much only scalp and day trade, but I got short up in here, and up in here in this area, and I really felt confident this market was going to break lower. But of course, when it first got short on the way up, as we got to this extreme here, I was thinking, well, God, it didn't, stop falling back. Sometimes the CAD gets like that where it doesn't even move. And so it was just hanging here. And then you saw my analysis over the weekend. I said, market needs 2 consecutive closes above 34.12 for bulls to get giddy. And I really felt that this market was going to break lower. Now, obviously, this was way before, Trump and Draghi, but I still felt that we were going to break pretty good on this. Maybe not this much, but have a pretty decent break on this. So even though I rarely ever hold, this was one I felt comfortable. I've been stuck having to hold the Euro Aussie overnight. I did not like that at all. But I said, I feel really confident. I think, we've really, technically speaking, we had broken below here. Any rally back is going to be a sell. And then I'll be doggone if I saw Deutsche Bank in the Asian session. This was like 2 nights prior or 3 nights prior, had got long at 34.15 or right there. It was said right there in that area, 34.15, with a stop of 32.25. Well, obviously those sorry you-know-whats, now they got clocked out. But as the market actually then, right after that news came out, we actually saw the market push higher. And the market had been kind of lingering here, and we started pushing higher afterwards. And so I ended up getting spooked out, and I did make money as I got out. But boy, this really left a sour taste in my mouth, because look, we've really fallen. Even when after I got out, eventually we did go before even the Fed dipped down, obviously much lower. And like I said, that really ticked me off. But anyway, that being said, let's go on and move in here. We've certainly broken back below. It certainly looks like we're opening the door for us to go on and move, obviously lower, which is what I was looking for overall before I got spooked out of my good trade. But that being said, let's look at the resistance for today. Boy, we've really come undone here. Take a look at a 2-hour. We actually got some support here. You see that? So we're going to say support right here at 32.08. Yeah, the one time I decided to hold on because I feel really good about the trade, and I don't mind holding on to it. I ended up letting myself get spooked out because D-Bank, oh, Deutsche Bank called it their trade of the week. Their trade of the week. They're so confident they put basically 175, actually about 185 pip stop. Man, those idiots got stopped out not too long ago. Their trade of the week. And at the time when I saw it, be honest with you, I don't like to, you don't want to be dogging anybody, but because I was short at the time and the market started going against me right after they, I think it was Forex Live posted that. And I thought, well, you know what? These guys have been losing money so much. I go, this is probably going to be a sorry trade for them. But like I said, then we started moving higher and we moved up into the 30s after it was just kind of hanging around the teens. I'm like, oh, man. But anyway, on the upside, resistance is going to be, that's a pretty good stretch, 32.78, but just go with 32.72. 32.72. Man, I can't believe I allowed myself to get wiggled out of that trade. And let's go into the dollar peso. We finally started to break lower. Support's going to come here at this 1892.5. We've had that 1903. Eventually, we finally broke yesterday. Obviously, issues with the dollar. So 1892.5. Be 1905.5. Let's go to the dollar yen. We've really come off here. We had that 760 as our 61%, and not even confluence here. Well, actually, if you look here, right there, that comes in at 765. Let's use that as our support. Let's go into the 2 hour though. I mean, we've been lower, but hang on. Let's see here. And we're trying to hold right there. And there's 758. 758 for right now. And on the way back up, well, you can see here at 810, but we'll give a little bit of room here. So we'll go up to 821, 821. And let's go into the cash dollar index. Well, we've broken back below, and like I said previously, we've seen these ups and downs with the cash dollar index over the course of the last couple of months. You can see, look at this pretty good little fall. Then we turn around, rally up real strong. Everything looks like it's just hunky dory. We take a quick dip and then come back up, and here's that fall we've been looking at. I know people have been telling you that the data is okay. Look, the data has not been okay, and obviously the Fed said that too. Okay, as I told you before, with the exception of the retail sales and I don't know what else, everything else is pretty much, we've been saying that, we said in the pre-FOMC. The only difference was that Draghi threw a monkey wrench in there, and of course Trump got all upset, and then him going after the Fed. So it was gonna, I thought that they were gonna lay the groundwork for a pretty good little cut. They did, but like I said, maybe not as resolutely, obviously, in light of everything that happened. But this is what the market's going with. It's going with that, with the potential for that cut. And I know a lot of people, I'm saying is a lot of big traders that seen were looking for this cut. So even though we saw the dollar pop back up, I think they're looking for cuts that are going to keep going. And in that particular situation, you sell the dollar. Now, I don't think the dollar is being completely all beat up right now. I think that any longs back up here are being unwound, but be careful, because any moves back up are going to be a straight up sell. Maybe not to the extent of the dollar CAD, but it's going to be a sell, because as we start to garner momentum, then this thing can really start to go and fall. And it's not a matter of just Johnny come lately after this market came down here. It's just that things, the expectation is the Fed will continue to cut. In that type of situation, you sell the dollar, okay? So we shall see, I think that we're just seeing some continued liquidation here. We'll take a look at what we're looking at for support. In the meantime, we did come to our 96.91, our stretch target in the Asian session. We bounced off a little bit, but the euro was really holding up really well. And that's why a gentleman asked me about that. And I said, wow, you know what, I scalp. And meaning I was looking at super, super tight time frames. I'm like, man, this thing is holding up like a rock. The dollar index is bouncing, not even a lot, but it's kind of moving off. That should be enough to knock this euro down into the low 50s. So I was able to get out, but right after that, I'm not, the thing started to turn around, just started moving up higher, moved up into the mid 60s, and obviously the rest is history. It moved up even higher. But anyway, let's go and move into the 2 hour to get a general idea here on this cash dollar index. We're going to go with this 96.62 for support. It didn't quite make it there, but I think I like that area here. And resistance would be 97. There we go. And we'll move into the cross trades. Honestly, I didn't get it where people were saying that the data was good. I mean, relatively speaking, and you know, that's my little saying, it's all relative. Relatively speaking, the US has been still doing good. Have the economic reports been good? They have not. Just going in, you know, let's go back and forth. I mean, let's pull out the reports over the last 6 weeks, last 2 months, and I can bet you dollars to donuts, man. I guarantee that at least 75% of them have been on the weak side. So I don't know where people are coming up with this. The data looks good. The data looks good. The data has not looked good, folks. Relatively speaking, the US has been doing better. But this baloney about the data has been good has not been the case. Anyway, let's go over here. Looking at the Kiwi yen. And I guess I'm still ticked off about getting out of that dollar CAD trade. Man, and I never hold trades long. And the one trade I was going to hold long, and then Deutsche Bank comes out with their trade of the week and spooks me. I ended up making some money, but it was just ridiculous. All that money left on the table because I got spooked out of the one bank that has been in the hole bigger than nobody, everybody, and they end up with their trade of the week with 175 pip loss. Well, they've already got stopped out this morning, but ticked at myself for getting out of that trade. Resistance. A pretty good fall too. Let's go here with 71.19. We'll call it 71.20. 71.20. Call it 71.22. There is some resistance right here, but we're going to allow for it to pop up a little bit. 70.62 and 71.22. Let's go in here to the euro yen. I'm going to go right here with 21.84. Support, we're going to go right here with 21.36. It's 21.82. Resistance 21.84. Let's go with your Aussie. Other than a few little pops here and there, I just don't really feel that comfortable trading this market. I mean, I've caught a few okay moves here. Like I said, sometimes it'll hang around here. Let me go back to the 2-hour. What I've noticed is you really have to catch it on these turns. When you catch it on these turns, it does well, but as I told you, I'd get in there and it would just sit there. Now, obviously, it would pay, and I got lucky on one trade, as I told you up in here, I don't even know how the heck that happened. I ended up getting stopped out, but ended up getting long. How that happened, I don't know. And I actually ended up getting out right at the top before it started going and slide back, but I never did get back in it. But this is a tough one to trade. It really is. But it does nicely when you catch on the turns. If you wait for the momentum, me being a scalper, sometimes I don't want to wait for that momentum. That's why I feel more comfortable trading the majors. And then we're starting to get some volatility now in the majors. Because you get that, quick, and not that you don't get it here with the Euro Aussie, you do, boy, it can be a quick little mover. But I like the back and forth movement here in the majors. You get a real sense of where the flows are kind of coming in. Which I don't know if it makes any sense. Like you might if you're used to scalping. But anyway, that being said, resistance will be right there, 63.48. I'm not even sure we'll even get that close there now. But it does feel like, I think with the liquidation of the dollar, and that's like I said, it looks like the dollar cat's holding up here. We had 32.08 and that held it. We're 32.16 right now. I think we're going to, at least in the short term, all the way till July, I think we're going to get some pretty good movement here, folks. And I think we're going to get some good, movement here, which will be nice for day trading / scalping. Support's going to be right here at 62.90. Go with that. The Aussie's still strengthening. Let's see. Let's go just a little bit around. Right there. 62.79. We are forming what appears to be a head and shoulders here. Look at that. So maybe we're going to come back down here. And obviously, remember we talked about this in the pre-FOMC. I really think the Aussie's going to do very, very well. But it certainly looks like a head and shoulders. I think I'll just go on. Hang on. Just want to post that real quick. Be just a minute. Apologies, I just want to go and share that because I know quite a few people like to trade that. You're odd. It'll be just a moment. Apologies. Well, okie dokie. I got that posted. Okay. So now let's go move into the Euro Kiwi. Man, this one sure is stuck in neutral. Let's go and take a look at the 2 hour. Well, we're holding that support that we had. We're going to go and keep it. It's had 71.40. It's holding here. Resistance is going to come down here too. I don't know about that. Keep it tight. 71.74. Let's go moving now to the Aussie yen. Nice little rebound in here. After hitting that 74.02, remember we've been talking about that 74.02 for quite some time. It's a huge level, and it did hit that 74.02. Remember we took it out by what, 7 pips or something like that. But we were looking for that 74.2 on the way down. Remember we called it the death spiral, and we had some support here at 74.47. The market tried to hold a little bit, but we felt that the overall target was going to be this weekly support, and eventually they certainly did make it down there. Really just kind of holding its own here. Nothing spectacular. Let's move into the 2 hour. Boy, nothing to write home about, I can tell you that. Hang on. So support's going to be 74.22. Seems like we do a little bit better than that. Let's go with right there. 74.28. Hmm. $74.81. And 74.73 is at 38%. I like that 74.81. We already had it. Looks like we'll move to 81. We'll not off by pimp. Let's go move into the guppy. Finally getting a little bit of life in this thing. Huh, right into the resistance. There's our resistance. I think it was 37.08 if I remember correctly. Maybe put 37.11. Let's take a look. Oh, yeah, 36.69. Oh, take it on the way up. That's just an old level, but that 36.69 was from before. So I like this level here. Let's go with that 37.11. I think that was the bias chart resistance from 2 days prior. And the thing still kept going lower. So 37.11. That's right, because I remember in the morning we were already moving higher. I'm like, wow, it's already gone beyond the 36.69, which was our bias chart. And that was yesterday morning, so we were really moving ahead. So yeah, 37.11 and support. Let's give it a little bit of room right there. So let's go with. Mm-hmm. 36.49. And let's go and move into the sterling odd. This is that old resistance we had. It's a huge level, 84.14. We're just going to give it just right there. You see here? Right there, which is 84.16. Obviously, these things can get bumped around because we've got BOE today. Let's go with 83.32. And there we go. There's the bias chart for today. I'll get that posted in the room. And thanks for joining us here on the European Crossover webinar. There we go.